So welcome back to FinTech Festival India, and thank you for joining us for this track where we will discuss various topics and aspects related to B2G collaborations and digital disruption. This track will touch upon some of the most pertinent issues from various sectors within the FinTech landscape. So without any further delay, let us give a huge round of applause to our first set of experts on the track. This panel will discuss the connected insurance providers and improved value, the road ahead for InsurTech. I would now like to invite our esteemed speakers to the stage. This session is moderated by Dr. Shreeram, Iyer, National Lead Startup Ecosystem Development, EY, who is joined on this panel by Sarbvir Singh, Chief Executive Officer, Policy Bazaar, Satishwar Balakrishnan, Managing Director and Chief Executive Officer, Aegon Life Insurance, Ramgopal Subramani, Chief Operating Officer, Perfios. With this, we will hand this panel on to Dr. Iyer. Sir, the stage is all yours.
Hi, good morning, all of you. And it's a wonderful day, and I'm very happy that that we got quite a lot of audience who's interested to talk about insurance and discuss about insurance. And more than that, it's a matter of privilege for me to be sitting with the wizards or one of the legends coming in from the insurance area. And I'm really thankful to the entire arena, FinTech and InsurTech domains for arranging this entire conference that we have. Nevertheless, as you could see, the topic that we want to talk about or discuss today or ponder today is about how connected insurance is adding value. Now, if you see this entire space of insurance, globally it is somewhere around $5.3 trillion. So the market is $5.3 trillion. We are talking about LIC going in IPO, and somewhere it is expected that government is going to make more than 5,000 crores and so on and so forth. So the market of insurance is phenomenal. Now, not only this, if we see, I had this good opportunity to work in Western world, to work in Australia, Germany, and so on and so forth. And I saw this connected insurance starting in right from there. So the moment I open a bank account, the person tells me that, sir, there is an opportunity for you because you live in quite a lot of an area wherein that you have quite a lot of clients visiting you at a high profile job. So it's very important for you to take a household insurance for everything that you may have, or probably take a fire insurance. So the bank itself starts selling you the more and more of insurance with the connected partners. Not only that, I was again fortunate enough to be a student of Dr. Bala, and at that point in time, it used to happen like he used to have pacemaker, and I'm talking you almost like around 8 or 9 years back. And the moment he used to run faster or walk faster, he'll get an SMS saying, sir, you are actually walking a bit fast. So technology has really moved quite a lot, and there is a lot of value of insurance which can come into the picture. So as we get started, what I'll do is I'll quickly pose the same thing to one by one to each one of you to understand what is your idea about connected insurance and how it really adds value. So Mr. Sarbvir, the first thing is your opinion on this entire topic. What do you feel about it?
Yeah, good morning everyone. I think as Shreeram has just introduced, the idea of connected insurance is a logical idea. It's something that we all can agree with and understand. I would actually just like to take a step back and explain that insurance, the problem with insurance is connected or otherwise, is that there is a fundamental challenge that nobody really wants to buy insurance. So it's a product which actually no one really wants to buy. It's a product whose need everyone understands. So if I ask you that should you have insurance, I'm sure you'll agree that you should. But I'm sure that many of you would not have bought it. And the reason for that is that, we feel that we can get by. So there are many, things that it won't happen to me, it'll happen to somebody else, I'm too young, etc., etc. So the reason why I think connected insurance can play a part is that in a situation like this, where the organic demand for the product is not very high, where it is a push product, right, where you have to always explain to somebody why you should buy insurance, bringing insurance to the point of sale helps in creating that demand and awareness. So if I am buying a mobile phone, if at that point you tell me that if your screen breaks, I'll be able to repair it, that, would probably appeal to you. And at that point, since you are already spending a fair amount of money, you may be interested in doing the second step. So I think more and more, this is actually a trend in finance, not just in insurance, that the delivery of the service or delivery is happening at the point of purchase. So we are taking loans. Earlier you would take a loan, then you would go to buy a refrigerator or a air conditioner or a house or whatever, or even buy food. Now at the time you are buying the stuff, however small the amount is, you can get a loan right away, right? Practically. So I think the same thing, that same trend will happen in insurance or is happening in insurance. And I think it's a very welcome thing because, as I said, for a product whose demand is not very robust organically, it allows us to reach people at that point and explain to them why they need the product. So I think that's really the way I look at it.
That's wonderful. The point that you made, that you make people sensitized that you're buying something and you are going to need it. That's really phenomenal. That sensitization really triggers that part. Yeah, absolutely. Mr. Satishwar, your views on this point.
So am I audible? I think because there's a lot of surround sound. So one is, like Sarbvir touched upon, it's a push product, right? And what you said, Shreeram, so the example which you gave was again talking about the moment you touched up with something which is more a financial instrument or a financial services provider, right? So banking and getting connected. Now that's where we see a huge opportunity. Now what we at Aegon Life have basically believe that tech is future, and you have actually seen a lot of disruption in those spaces. And specifically from an India perspective, we now look at the adoption of smartphones, look at the adoption or basically usage of internet, right? Look at how the whole payment system has changed. So we strongly believe that the foundation has been laid, and it's now important for insurance to be made available at various other touch points and not just with financial services provider. Okay, so that kind of is creating more competition for Policy Bazaar. But per se, what we are saying is, and that's also one way of actually creating the pull. So one is, of course, we as manufacturers or insurers or the carriers will have to make the entire process much more easier and simple. And second is a lot of awareness to be created, because if I ask, as Sarbvir said, if we actually ask any one of you, do we need insurance? We all say yes. But currently, in this whole space, we don't actually take that first step of going and doing that. And that's where I think it's our responsibility as manufacturers and the entire distribution ecosystem to reach out to the customers. And that's where we believe as getting connected is actually adding more people or more resources or more avenues for us to reach out to the customer and not just restricted to the financial services piece. So whichever digital or data, and basically for us to reach out to the interiors of the country, digital has reached, tech has reached, and can we use each of those platforms to also have insurance to be distributed through them. Now that's where the connectivity comes in, and it can be a retail product or even a group product, right? It's getting embedded. So a certain use case which we are seeing as, because insurance is not a pull product, we are seeing insurance being sold as a value-added service. Okay, so one of the use cases which we've actually seen and which is kind of catching up is very clearly coming as loyalty rewards in the form of insurance. Okay? It's getting embedded and nobody says no to it. But that's more getting entrenched, but you'll have to actually, the cover need, you can't fulfill the gap, the actual insurance needed versus what has been getting covered through the value-added services. That will be a minuscule of what the actual need is. So it's more getting in and then kind of expanding that whole space. So embedding for me, or rather connected for me, is any avenue which can reach out to the customer. Can that avenue also start looking at insurance being sold through that? So that's the connected piece for me.
Absolutely. So that's a phenomenal point here, that we are talking about value-added services, and you will be very, just to add on to your point, I guess ICICI collaborated with one of the payment banks to see that if they can send in more of the insurance just as a value-added services, or probably create it into small pieces wherein you can pay money and do that. So that's a very phenomenal point that you added here. Ramgopal sir, what is your idea about connected insurance and how it adds value?
Yeah, sure. First of all, good morning. Am I audible? Yeah. So basically, you see, from a connected insurance, I look at primarily embedded finance. Okay. Now, one of the part is, as you look at coverage in part of it, right? So first of all, insurance, like a product, like I said, it's not a pull, it's a push. So which means partnership becomes important. But at the same time, with increasing the coverage across masses, because the penetration of insurance product in India is still very low. So which means that from a partnership perspective, technology starts playing a very important role. And the other part is access to data. Data on a real-time basis, digital data comes relevant. So what we have seen is, especially from the lending side, now today you get loans as low as 10,000 rupees, right? And to all the way up to maybe a 50 crore kind of a loan. All of them are using a lot of data, but the part is for a 10,000 rupee loan. Obviously, you can't incur the same kind of cost which you do for a, let's say, a 5 lakh loan or a 50 crore thing, right? The same manner on an insurance product, right? Again, if you want to increase coverage and if you want to do partnership, I mean, whether it's an e-commerce site, partnership where they're buying a consumer durable, you're giving them a household good policy, correct? Data has to come about the consumer and all those things, which is where technology started acting like a bridge. So there are standards which are coming in terms of account aggregator, and then there's this whole open credit enablement network, and then also things like ONDC, digital commerce. These come into play, and that is where we are seeing more and more predominance of this one, with also brokers now, more and more insurance brokers with license being given, like the whole partnership between Policy Bazaar and Satish's organization, right, and other organizations. So there, how do you make it more seamless, more real time? I mean, one of the things is pay as you drive. Yep. I mean, the last 2 years in COVID, no one drove, but you still paid a car insurance premium, correct? Or you're taking an expensive camera for a trip. You just want a point of loan for a short duration. So as you think about imagining newer products, because one of the aspect, again, if I take a view of an outsider or a consumer, right, it is insurance and not assurance. I think the notion has to change towards assurance, because at that point of time when I have an incident, do I get the money? I mean, even in a hospital, your health claim bill is basically 60% covered, but you have paid premium for every year, right? So I think the industry also has to think about assurance more than insurance, and then see how do you bring that as a experience for the user.
So these are very, very valid points that you're talking about, like especially that, that bringing in the assurance part. And we have also seen the new generation or the people, those who are working right now, we have reduced the patience. So now in that case, as you said, the technology, if it can really work real time, that can really, and if that is backed by assurance, yeah, absolutely, there is a massive, value proposition there. Now, I'll come back to you, Sarbvir. Policy Bazaar is a phenomena. We have not seen any such businesses in India, and it's wonderful, massive business. And you have a variety of products. Now, I would like to know and understand from you, what are the new products that you are bringing to the model, to the entire insurance ecosystem?
Sure. First, thanks for the kind words. I just want to explain. I mean that if you ask me what is really good or great about Policy Bazaar, I mean, I'm sure there are many views, but I'll just share that from our perspective, there is only one thing which is very important. It is the fact that it is the one platform where people come to buy insurance. As I explained to you earlier, the biggest challenge in this business is that nobody ever comes forward. Everybody is sold insurance. And I think what we have been able to create is a platform where people come to buy insurance. And that positive intent of coming to buy something versus being sold something makes a huge difference in terms of the products, in terms of the quality of business that we get, in terms of the experience that our insurance partners get, etc., etc. So I think that for us is the main thing, that we want to make sure that, as our tagline says, that her family hogi insured. So we are focused on getting all middle class Indians insurance, and so I think even if it happens through some other medium, we are actually quite okay with that. Now coming to the point that you raised, I think our focus, unlike some others, is actually very basic insurance. So we focus on term insurance, which is required, to protect the wages or the income of the family. We focus on health insurance, which is again very, very important, because if something happens to anybody in the family, they should have the ability to get proper medical care. And our focus is very much on that. So you will not find us doing too many smaller types of products, etc. Because we feel that in India, the real need is for health insurance and term insurance, and that's what we focus on. Now, in that light, one very important change has happened recently. Earlier, all insurance products had to be basically what was called a file and use regime. So first they had to be filed, and then they were approved, and then you could launch them. Now the regulator has changed that to use and file. And to us, that's a very big change because now the time to market for products can be reduced significantly. And so I think answering Shreeram's direct question, I think what we expect will happen is that as insurance companies get used to this regime, more and more new products will come, and we think the segmentation will improve. So the products will now become much more customized and personalized rather than just being one policy for everybody. There will be customized policies. Say in health, you'll have again disease-specific plans. You'll have more plans maybe specifically for women, more plans depending on the age, where you live. So, if you live in a smaller city, it's very different from if you live in a metro city. So what we are looking forward to is a sharper segmentation of risk and sharper segmentation of plans, both on the life side and on the health side. And I think as far as other forms of insurance are concerned, cyber is a very big area, which again, we all can understand why. All of us are living spending a lot more of our time online. So I think those kind of products will also come in. But for us, the main interest would be to get sharper segmentation in health and term insurance.
So that's a very brilliant point, sir. I would really echo to that point that, when we were taught in IIM, they were clearly telling us that, the best size of production is one. And that is what you're saying, that when the customization can actually happen for an individual's need. And especially the other part that you were talking that, now you can pilot the product and bring it. So these are really phenomenal insights into it. So your idea about it, Satishwarji, that, that the products that you feel are going to come in the insurance space.
And I think Sarbvir kind of, and he understands the whole customer space much better, right, considering that whole thing. So earlier, the whole process of getting a new product up and running used to be anywhere in the range of a minimum 3 months to 6 months, right? And from that perspective, you would normally be able to do, say, some 3 or 4 products in a year. Anything beyond that would have been very difficult. Now with this huge change, which is more moving into saying you design the product, the regulator has basically given the rules and principles, and within that we have to construct. Now that it's on us to kind of come out with new ideas and those things. Segmentation is very much possible. Otherwise, earlier we used to cover everybody in one product. Now we can actually look at specifically segmenting them and cater to specific needs. So trying to do everything in one go, that moves out, and you can actually move into specific segmentation, which helps. The other thing which I believe is because of the tech development which has happened. In fact, Shreeram, I'm trying to basically also move into that other space of which you said, the customer patience level is also coming down, right? So he wants everything to be instant. And that is where we are trying to drive a piece because, see, underwriting, the way you have your security check which happens in an airport, underwriting is something that we need to do while we onboard a customer. That basic screening has to happen. And that is where a major friction point from a customer perspective is concerned, and that's not instant. And that's where we believe tech, especially tech along with data, is helping us a lot. And that's where we are saying from a customer perspective, he might feel that underwriting is no longer applicable. But there is a huge back-end process which can work using data, and we can screen. So account aggregators play a role there, right? So it's basically you are authorizing as a customer for us to do and get those things done at the back end. From a customer perspective, then it becomes one interaction. He has done it bit, and then it's on us to go figure out, fetch those various data and underwrite and give that either instant or at least the next day issuance. But the interaction with the customer can come down drastically. Yep. So patience level coming down, yes, at least in terms of application, you will see our new product and new process talking that language. But it's a matter of time that it will also become instant. I think that's where the entire ecosystem of tech that we are talking about, the connected piece, it's not just connected from a distribution perspective, but there are various services which are now coming in. And thanks to all you guys in terms of the FinTech space, right? Because all the services are now available and they are very clearly integrated using the API setup, it has become very harmonious. And that's where the patience for the customer can be catered to, and it can become into an instant piece.
Yeah. No, absolutely. I like your point, when the products are being designed as per for the segments, because if you especially talk about any product, maybe any startups, every product probably is a small startup idea in itself, that every segment. So until that segment is matched with reference to what you were talking about, I don't think an insurance product can be successful. So I completely agree to your point there about, that talking about the segments that one product, one insurance product will not work for all?
No, so finally, if you look at it, what is insurance, okay? And we keep on talking about awareness in insurance. But if you actually ask anybody what is insurance, they will give a perfect example or perfect definition for that. If I die, my family gets money or my nominee gets money, right? That's insurance, and I think everybody is aware of it. What is required is the urgency that if I die, is my family financially protected? And immediately, and we as people find it difficult to start thinking that I can die, and I can die tomorrow, or for that matter, next instance. That doesn't creep in, and that's a very difficult piece to do, right? But if you actually notice, the product per se is cover, okay? And what do we do is we say that it's a huge number of people, and within that, certain people can die, which is nothing but, and that's where the actuarial piece comes in, who basically analyze a lot of data to figure out the mortality rate in India, which is nothing but at what specific age, how many people will die. And that's how you price it.
Okay.
So the underlying pricing can also play based on profile.
Okay, sure.
But though it might become individual products, the number of volume can be lower, but the base, when you actually put all of them together, it still becomes that one core product.
Sure.
So the segmentation which you're talking about is much designing it from an end customer perspective.
Absolutely.
But finally, it's all going to that one huge pool of money.
Yeah. So I have actually a question for you, but let me just quickly catch in the opinion of Mr. Ramgopal on the previous question, which was going upon as like, what do you feel are the new products which will come into the insurance market?
I think basically what Sarbvir talked about and Satish also talked about, right? So new products is based on segmentation, right? Which means getting to the point of a single customer and underwriting, which is risk management. Now what we see is as you get to so in both of these parts, right? So again, there's a lot of emphasis on data, right? Which is basically how do you get data on a real time? I think the third element is customer experience. How do you kind of verify a customer's identity, his employment, his address, whether it's a business, okay? So all of these things, basically the technology of getting data for that, making it available and understanding risk, okay? Someone is, as simple as a small business which is selling umbrella, okay? Someone selling umbrella in Cherrapunji has business for probably 7 months in a year. Someone selling umbrella in Jaipur probably has a business for 15 days in a year. How do you kind of take that into consideration to do that personalization? Okay, so I think that is where you start looking at data. And in the last 10 years, India has become really rich in the amount of data that we have, right? Just in the quantum of thing which we deal with around 800 odd clients, FinTechs across banking, lending, neo-banking, InsurTech, insurance companies and all this stuff, right? And we process around 500 million line items of financial transactions per month. And what we have seen is the amount of data which comes in, as simple as based on a mobile number, okay? You can identify whether someone is a roaming person, okay? Now, if he travels a lot, if he's roaming a lot, does he travel? He probably definitely needs a travel insurance. He might be going by train or airlines, right? Okay. Now, for him, that product is more relevant from the risk of life and income, right, versus someone who is localized. So, what I see is innovation can happen on the products basis the kind of data which comes into play and leveraging the power of technology. Okay. That's a part of it. So, which is where what we have seen is some of the newer players in the market, right? Obviously, traditional players are transforming by using a lot of technologies. They have the reach, okay. But some of the newer players are coming up with slightly newer specific products. Even for insurance has the problem of penetration, whereas the risk element, right, is still there. You still rely on the fact that someone who does not have a credit history, how do I understand his risk? So which is where, again, these are some things where newer players are trying to go and solve for. Can I go and increase the reach of customers, right? As simple as this, an agent. Agent who's onboarding a customer, is he genuine? Is he doing a fraud? Okay, because it is still connected, it is distributed, you want to increase the reach. If you want to get to the rural part of India and sell insurance to them, crop insurance to them, right? is there crop pattern data? Okay, so which is where many of the fintechs and others are bringing all of these things into play and helping the change one customer experience. You can pretty much get a insurance policy hopefully in real time, okay, right? Not just a life policy. And the other part is we talk about risk. Largely we think about risk in terms of only life and health. We don't think about risk. We pay, I mean, someone buys an iPhone, you pay $1 lakh for it, okay? You don't buy insurance on that one. So more and more you're creating assets. So I think those elements and those point of sale things, right, is where a product innovation can happen.
That's a brilliant point, yeah.
Just to add on that, so one is the example of mobile. I think that's a classic for embedded as well as connected. It's catching up wonderfully well. So if you are buying, and this is again I said from a fintech space, from a retailer perspective, it's still not happening. But if you actually are buying it from say any of the e-commerce partners, they are embedding it. Okay, so it's at a very small cost and it's a tick in the process and insurance gets added to it. Just on the product space again, the way I said the product is more or less the same. What needs to happen is more innovation in the proposition. Okay, and that's where I'm saying it's rather than financial services, can it actually reach to a lot of other D2C businesses? Okay, for example, if it's somebody is buying a diaper, okay, now that's a lifestyle change or a life stage change, right? And that's one way of we looking at catering or basically bridging the gap in terms of awareness, because that's a very opportune time to actually tell him that guy, boss, it's basically your responsibilities have increased. There is one more responsibility which has got added. It's better that you get yourself insured.
Absolutely.
Or another example is of propositioning is higher education for my kid. Okay, and these are now costlier pieces. So they have gone in, and can I make it very specific segment? The underlying product might be the same, but if something happens to me, I don't want my kid's education to suffer, right?
I agree.
Can I cover that?
Absolutely.
So along with the rent, along with the fees, one is the education institute itself or somebody else, but then it's connected with the education institute along with the fees. It basically helps you with a cover saying if something happens to me, my kiddo's education is not going to suffer.
Absolutely.
So that's again an example of connected and proposition. So a lot of proposition is where we'll have to create.
Yeah, absolutely. I really feel that this discussion could not have been better. Means there's so many insights coming in, like how data is playing a role in terms of person traveling, how the segmentation within the product itself can happen. It's phenomenal. So now my next question is directly to you, Mr. Ramgopal, and it is about you're playing with a lot of life, and life is very important from a perspective of your insurance entire business. So now in life insurance, how you are working, or how do you see the future of life insurance from a data perspective, that what is happening, how are you going to use it?
See, yeah. So if you look at the part, right, again, insurance is again about a promise and of an event which can happen. I mean, obviously, mortality is given, right? So which means that, and then you're in all potentially, you're basically giving a promise for an event which will happen several decades later, right? But you're paying for it upfront. So which means that you have to understand what is the potential of person's earning today, because at the best, someone who's basically, let's say, earning 15,000 per month, and he wants to take the insurance at a 25 years old for 5 crores, right, is very different from someone who's 50, earning 15,000 per month and asking for insurance of 5 crores. Right? Okay. That 5 crore for a 50-year-old is probably a lottery. But whereas a 25-year-old, given the changing trend of data, can be there. So which is where data comes into play in terms of the data available on the insurance, right? One is obviously more and more data is, so one of the other things which has been phenomenal in India is amount of public data which is available today. I mean, if you look at the health spend, right? Education, you look at employment. I mean, like we have as Tarza, right, which is basically a company which we recently acquired. We have data about 5 crore entities, including obviously a listed private companies, but proprietorship partnerships, right? Okay. Now, profiling of we are able to profile and say that. I mean, even we need to, if you think about a business insurance, right? What is the continuity of a business? Okay. How long have they been performing? What is the vintage? So one big part of insurance is, one is the ability to pay, right? Because then again, Satish and Sarbvir will talk more about the cost part of it. You start making money only when someone is paying premium for maybe 5 years or more, right? And you don't now. So one is ability. Second is behavioral. Is there an intent to pay, right? What is, I mean, someone paying recurring payments of salary, your utility bills, right? I mean, as simple as someone missing out paying the utility bill, someone pays every 3 months. Is it about a capacity of finance problem, or is it an intent problem? Capacity of finance, then you know he can't afford that kind of premium, correct? But intent is a separate part, which is where the droppage and wastage happens from a customer perspective. So these kind of data, and then then verification, right? So one is underwriting. So what we see is there is data not just about consumer, there is data about businesses and small businesses with the kind of programs that government has had, right? Now, you get a lot more information about small businesses than you were getting earlier, let's say 10 years back, right? So which means that to an extent to say that, and interestingly, all of us think GST is only filed by larger entities, right? But the smaller entities, if companies with turnover of less than 40 lakhs contribute to 75 like GST numbers. Okay, out of the 1.4 crore GST numbers that exist. Why? Because a mid-size or a smaller enterprise asks the smaller entity to file GST because they want to get input tax credit. So this is a behavioral change. Okay. Now, in the same way, I mean, like, I think I see insurance also being a consumer behavioral change or a business behavioral change. The fact is, a small kirana shop, telling him, boss, you are a retailer for, let's say, ITC. Correct. ITC doing an embedded insurance office shop for fire. Okay. Here they have more information about the entity which comes into play in terms of their vintage, what is the repeat order, all those stuff. So that is where what we are seeing is, one is public data, second is data coming through concentrated infrastructure, third is information about businesses. So these are three large pieces that is helping, okay, this one, and that is where you're able to understand, see again, like you said, right, we look at around 500,000 banking transaction. So at a pin code level, okay, we can say what is the financial characteristic of a pin code. Okay, do people have, again, if you're paying your premium, it shows up in your bank statement, right? If the affordability of that segment, right? If the segment does not have salaried employee, a pin code which is there, obviously Mumbai itself, you'll see a lot of variations of pin code, or Delhi, right? Okay, each city. And then as you go further down the maps of India, right, you start getting that kind of information which can be used from marketing insights. Okay. Then you can be also used for risk assessment and risk profiling as to what kind of product to structure, how to manage your risk element. And then finally, there is a lot of information available in terms of verification. Identity, address, like your LPG. Everyone has a LPG account today. So whether it is because of the DBT or otherwise, because most of them is linked to a mobile number, you basically call up and place an order, your OTP comes to you. So now you're able to, and someone will have a LPG cylinder at your home, right? You will not, if you're renting out your flat, you will not give a cylinder there, right? Becomes a mechanism to verify address. So that is where we see all this interesting manifestation, which is where the lending business has transformed so much that today roughly around 15% of lending across the country is digital. Okay, and bulk of it is 70% of it is small tier loans for either personal or businesses, and that's a potential which can come into insurance also.
Oh, wonderful. That these are phenomenal insights. Sarbvir, sir, would you like to quickly add something on the same point, that how data is actually helping from perspective?
So, I think Ram has covered a lot of the data points. I just again want to explain that why is this so important. There are two reasons it's important. One is that there is a percentage of insurance premiums that are paid out as claims, in any case. That is not the problem. I think all policies are priced for those claims. The problem is the element of fraud or misrepresentation that happens. So depending on the segment, the misrepresentation or fraud can be anywhere from 10% to 30% or 40%. So this 20-30% fraud that happens is a tax on all other consumers. Basically, the genuine consumers are paying a tax of 20-30% because of this fraud. Now, so to my mind, there are two roles of data. One is to eliminate fraud at the time of, or reduce, I would say, fraud at the time of purchase. Because minute you are able to reduce fraud, the cost of the product can be reduced for everybody else. And as you know, we are a country where when you bring down the price, there is huge elasticity in terms of demand. So I think that's one very important role. And of course, the second role, which I think Ram has covered in pretty good detail, is the role of reducing friction of buying at the point of purchase. Essentially saying that now so much data exists for all of us, whether we are individuals or small businesses or large businesses, that a lot of that data can be collected automatically and through the efforts of folks like Perfios and Karza, etc. And that can be then brought to bear to make the process of buying very simple. Because today what happens is that if you don't have that data, you have to take your application, then somebody goes and looks for that data, verifies it, etc., which takes time. And you may feel that why is it taking so much time? So that friction can be reduced, and obviously, as all of you who are in the online business know, friction is reduces conversion, and conversion, reduced conversion increases cost. So I think again, both these points are very important. Data can help on the reducing the fraud, etc., and then secondly, data can help on the friction point.
Absolutely.
Shreeram, just one more point here, actually on the fraud part. So one of the other things is basically on the health claim, health insurance claim, both your cashless and reimbursement, right? And the moment you go to a hospital and say you have cashless, right, your bill gets inflated, right? So what we have also done is we have been doing this whole work on health claim document digitization and analytics, right? So where we are able to today process from a health bill, understand what is each of the line item and what is the category of spend. I mean, as simple as this, you went for a, basically a cataract treatment, right? It's a typical standard product, 25,000 rupees of a claim amount, right? Now, but what you see is, there is a MRI scan done. Okay, and someone has been given a BP medicine. Right? So what we did is, obviously we are still relatively new in India, but for some of our international customers, just on the digitization and analytics that we have done on the health claim document, we have been able to save around $4 per transaction. Okay, we are not even talking about fraud and wastage. After that, we are doing this whole medical medicine categorization, treatment categorization. So which means that from an insurer perspective, health insurance perspective, right, they will be now able to truly negotiate with the hospitals to say that these are the terms, okay, if you are inflating your bill, okay. And the other part is the eventual benefit, which we think in the next 3-4 years will come in, is consumers will start getting the real benefit of it because they don't get penalized because of the hospital's overcharge.
So, very, very valid point, and it's I guess if somebody sitting here today would have got quite a lot of point that what really data can do. So Satishwar ji, I have a question for you. So like for example, there are a few startups that I've recently seen. Like for example, there are some health patches which captures all your data, even your palpitation or SpO2 and so on and so forth. That I was talking about, like that a professor having a pacemaker, and if he walks fast, he gets an SMS. So how is this entire kind of data going to come and impact the life insurance, the area where you are the king?
So this kind of thing becomes, so there are two levels of underwriting that we do. One is called as the financial underwriting, which is exactly what Ram spoke about. A guy who's just 25 years old and he's earning some 25,000 rupees, but he wants a 5 crore cover. That's a mismatch, right? Insurance is actually supposed to be an income replacement, and it's not a lottery. So that piece has to be. So one is that financial, and the second is something we call as the health underwriting. Now the health underwriting also has two aspects. One is what the customer knows, and two is also we want to cover what the customer doesn't know. There are quite a few things, or in fact we have quite a few times experienced that once he has done the medical underwriting, that's when even the customer realizes that he has a specific issue. Okay? And then that has to be also handled separately. It's not just an engagement of saying, sorry, we can't do it, or there is an XRD, but it's a larger news to digest also from a customer perspective. So when these things happen, so this can come in isolation, so you naturally need the way you have an account aggregator. Now that's the space where I can have multiple bank accounts, right? but then I'm going to fetch that data using an account aggregator. Similarly, there is the health aggregator which is also coming through. So it's the pay or the pacemaker or your SpO2. Those are one specific information. Whereas when you do an health underwriting, there are multiple aspects that you want to see. So an health aggregator on those rows is where we are actually looking forward to. So that it all comes in one go and we can build. But in the meanwhile, till the time we get that, we are looking at integrating with this multiple spaces. Now, when you spoke about connected and embedded, for a guy who has actually been using a fitness band, okay, for the last, say, 1 or 2 years, and we see a very consistent track record in terms of, say, 10,000 steps a day, which basically gives we as an insurer a comfort that this guy is more keen on taking care of his own health. Now that, specifically that customer, because we have that data, gets an, a preference. In terms of the journey for him to buy an insurance policy will be much easier than somebody else who doesn't provide me that kind of data. So all these pieces, yes, they are coming through a form of data providers, and naturally you will see that going back to the customer as kind of a benefit in terms of the processing altogether.
Oh, wonderful. These are really the very good insights. Now that I'll come to the last section and that we are about to finish things. Now, India is pushing in startups, and certainly, if you take example of Policy Bazaar, or it has been one of the finest startups that we have seen recently. But apart from it, I would like to know from each one of you, what is that one thing, in your opinion, a startup can do in insurance space? If you could please put in a couple of your lines, each one of you, Sarbvir, starting from you, that what a startup can really do. If you could add a couple of points in the insurance tech space, followed by I'd like to have your opinion and say your opinion as well. And then with that, we can close the session, sir.
I think whether it's for startups or larger or smaller companies, I think the question always is very simple, that I think we have to identify a need, right? You have to identify a customer need, a real need, and then you have to address that need. And I think in insurance, there are, if you look at it from that framework, I think there are a lot of needs, starting from spreading awareness, about insurance, why insurance is important, what are the types of insurance, etc. Choosing the right insurance policy, to, development of products. Like I think they can be, we spoke about connected insurance, etc. So I think many of those products can be developed. And then the third thing is the underwriting and the process part of it, because insurance will always have a process. So to make that process simpler. And finally, the most important thing that we didn't really cover today is claims, right? People buy insurance because if something happens to them, then they need that money or they need that cover. And at the point of claim, there are a lot of friction, whether it's in hospitals, whether it's, in motor insurance or whatever. And I think there also startups can play a huge role in making this process of claim smoother. Because if you make the claim smoother, then more people will have confidence in insurance, and I think they'll buy more insurance. So I think there are opportunities across the value chain in insurance. And I think the whole idea of being a startup is to identify a customer need and then to really, solve that need in a very effective manner, I would say.
Thank you, sir. Satishwar, sir, your idea on startups.
So as we are saying that the entire piece it's an ecosystem getting created, right? And you will also be a part of that ecosystem. So you can't have one guy can do everything. So it's going to be those multiple pieces. As Sarbvir said, there are stages to this whole piece. So one of the big piece which I would like to specifically talk about is, again, the propositioning, which is basically nothing but awareness. But can we make it much more specific or segment from a propositioning perspective for the customer? Okay, rather than it's basically saying, more than talking about the product, can I actually talk about the need and then marry the product to that need? And that can become one specific use case. The other one is, can I be something like a bureau, okay, where it's like the entire underwriting is outsourced or the fraud management is outsourced to that bureau. So you have done a lot of data management, and if that is being certified by that specific space, then it's the insurance company says, okay, you have this number. The way the lending companies look for a CIBIL score, right? That's another space which I can think of. I'm trying to be more specific, but as Sarbvir said, the opportunities are huge.
Yeah.
Segment it, take that one piece and drive that.
Absolutely. Ramgopal, your idea about it.
See, I think insurance is a promise, right? So where you're promised at some point of time you'll be given money. So I think first part is from a consumer perspective, consumer-focused fintechs or insurtech companies who are startups, right? First is they have to think about trust.
Absolutely.
Okay, establishing trust in the brand and establishing trust in the process, because it just takes few bad apples, okay, to pollute the whole ecosystem which is evolving. Okay, right? I think that is one part of it. Then obviously there are other things in terms of if you are enabler, can we use the solution to solve for it? How do we solve for that part? Make it much more the thing. I think awareness is really important, and I think that's where the product proposition comes in. And then leveraging reach. I think leveraging looking at the fact is how do you expand the reach, right? By innovation. Okay. So I think that will be a part of it. And last one is understanding risk.
Absolutely. So I really appreciate each one of you for taking out time and coming here. And it was a wonderful opportunity. I personally feel it was an honor and privilege for me to share the dais and podiums with Sarbvir sir, Satishwar sir, and Ramgopal sir. We heard phenomenally good about insurance tech, what exactly it is, what startups can do, how the entire market is segmented, and the opportunities. I really thank each one of you for taking out time today and really appreciate your time. A big round of applause for everyone.
Thank you.
Thank you.